All right. Get loud. Good afternoon. It's been a minute for story time. How y'all doing today? Ow. I am so excited to be here today. How you guys doing? Thank you so much for popping in. It's story time today. I am Crystal Bodie Smith, your host. I'm waiting for my guest to come on in the room. I'm waiting for my guest to come on in the room right now. She should be coming any minute. Yes. I'm waiting for Jonica to come on in the room. Look for her right now. How you doing, Queen on the Throne? How are you today? Let me contact her. Invite her here. So listen, let me tell you what's going on right now. Great. Good to hear that. I have a young lady coming on right now, and we are talking about we're talking about being prepared for the unexpected. We're talking about being prepared for the unexpected. Thank you so much, Captain Rowland. And what's happening is people are being caught off guard when life happens. Life happens, and sometimes tragedies happen. All kind of things happen, and people are just not prepared. And it causes people to not only lose a loved one sometimes, but sometimes they lose their houses, sometimes they lose their jobs, sometimes they lose their businesses. It's so many different ways that people are caught off guard when the unexpected happens. So what we're looking to do today is bring in a person who had the knowledge and the background and the experience to let us know everything we need to know, and see how, and I see her in the room right here, see how we can fix that. Okay, so let me go ahead and look for her. I do see that she has joined. And Jonica, send me a request and I'll go ahead and, oh, there you go. So today the idea is to help you to be prepared for those unexpected issues that come up, to help you with the unexpected problem, the unexpected tragedy, the unexpected deaths. I mean, there's some of everything that happens, the unexpected job losses, everything that happens. We're here to help you with that. And so we want to look at it from a different perspective. Not only do we want to talk about what you need to have, like the insurances, but we just want to go over a few things to make sure you're covered. Jonica, I sent you a request. Let me send it again, see if you see it, and see if it'll let you come on in, because I don't see a request from you. But I did send you a request. We have Dr. Jonica Rowland, who's going to come with us, and she has the background and experience for all of the above to be able to help you. And if you have questions, you'll be able to bring your questions and everything too. There she go. Hey, young lady, how you doing?
Hey. Oh, let me put my lipstick on.
I love the hair. I love the hair. Oh my goodness, that's beautiful. Beautiful. You know, how are you today, Miss Jonica, or Dr. Jonica?
Dr. Jonica is doing well. I'm grateful. I am grateful. Yeah, let me twist it just a little bit.
Excellent. And you know what? I want you to go ahead and tell the people.
I'm sorry.
I want you to introduce yourself. I'm going to go get my speaker. The earpieces I usually have, I don't have in, but I'm going to use my external speaker, so I'm going to get that. But I told the people that today we are going to be helping them to be prepared for the unexpected. That today we want to talk about some things that happened that could be a loss of a job, a loss of a loved one, many things that happen that cause people to kind of be caught off guard and catch a financial setback. But before we do that, please introduce yourself while I go get the speaker, please.
All right. Hello out there. I am Dr. Jonica T. Rowland, JT Rowland Wholesome Health and Wealth, and Jet R Concepts. Where we provide credit repair on one end and working on patenting other inventions on the other end. And the reason I'm saying that, the three businesses I have, the reason I mention it is because we limit ourselves. And I decided when I got my doctorate and I'm taking off all the limits. So JT Rowland Wholesome Health and Wealth, we're focusing on health and wealth because our health is our wealth. And if we're not doing self-care, taking care of ourselves, we're not going to be able to cushion the blow. And then we'll stop making money to have wealth. Okay. And so that's how I got to where I am. My mother was murdered when I was 10. My grandmother passed when I was carrying my first child. She was the one who reared me. 2018, my father and brother died 60 days apart. And we always think we're ready, but we're caught off guard. You know, I was working on my doctorate at that time. And so I decided to take like a little sabbatical. But then life happened. And so we have to start looking at the ways we are going to be able to maintain our money in financial crisis. And normally financial crises come from life events. Some people keep saying they don't watch the news, but I'm sure they heard the news with all that's going on in America with inflation, being over 5%. Okay. With people worrying about being in a recession, COVID, 1 million deaths, could be less or more. We know there's a margin of error. Okay. Because COVID affect other areas and people are really dying from other symptoms, but that's another story. So the thing is do you watch the news and freeze, or do you watch the news and move? Because if we aren't moving, we're going to continue to be caught off guard. And the number one way to handle anything in our life is to make sure we are staying healthy so that we can be mentally prepared. Okay, so that's what Dr. Jonica Rowland is about. If I wasn't walking and exercising hard, like you see Crystal lives now and her reels, she's exercising hard, okay? But I had started doing that back in 2016, 2017, 2018, and then around before 2004 came in, I thought I was going to be a bodybuilder. So I'm probably one of the only females who took around 6 PEs in college, physical education. And my sons were football players. My daughter is a dancer. And the thing is preparation. Preparation is the key.
So you talked about a lot of things, and a lot of ways, a lot of people get caught off guard. And you know, you see my shirt today. I'm wearing a shirt that says I'm a mom, and it also says I'm a grandmother on the bottom too, because we wear these hats, y'all. We wear all the hats. And
let me get my hat.
You know, when we wear all our hats, then what happens is we sometimes lose track of things. Okay, we lose track of things. So we want to talk about what are some ways you can avoid being caught off guard. And now we know, number one, that you should always have an emergency fund, right, Dr. Jonica? I'm going to say a couple things first, and then I'm going to let you come back. We're going to talk about the simple stuff first. The simple stuff like having an emergency fund, consolidating your debt. You know, those little things that you know about. Making sure you have a 401k, okay? Saving your money, okay? We're going to talk about that. Paying your bills on time so you don't spend unnecessary money on bills, you know, with the interest and the late fees. That's a big one too right there. You know, protecting your future and things like that. So before we even talk about the unexpected and we talk about those things, we have to have good habits, don't we, Dr. Jonica? We have to have good habits to start, right?
Right. And that's why I brought up what I was going through to let people know that, hey, I didn't end up a doctor overnight, okay? And I had life experiences just like everyone else. We all put our pants on the same way. So let's start focusing on ourselves so that we can leave that legacy. Emergency fund. Yes, we set up an emergency fund. A lot of people on emergency funds are gone now, so you have to do a restart. Are you saving 3 to 6 months of a salary in the event a job is lost? Are you saving up for that new refrigerator or oven, or are we going to charge it? Okay, and as a credit consultant, if you're going to charge it, can you get that 0% or that 1% interest, or are you charging everything on there 29%? How are we supposed to get out the cycle if we have these high interest credit cards? Now, payday loans were out there. I'm sure a few of us used that. Okay. But, are you getting in the today's era of a modern Shark Tank? We're not talking about Shark Tank on the news, but are you borrowing money from those who are going to be trying to charge you all this interest? That's just legal. It's still criminal, right? But we might not go borrow money from someone off the block. But if our credit is jacked up and we're paying 30% or more to get what we need, that's just the same. Okay. It's just legalized. It's legalized. So have your emergency fund, 3 to 6 months of your salary. Try to have at least 12 months. Have a system where you and your family, your own bank. A crisis happened on one end. Maybe you can go to a family member and borrow some money so you won't have to pay that interest, but pay that family member back. We have to get to the point where we stop thinking that the government's always going to send a stimulus check. Okay. Create your own bank within your family and don't talk too much. Because a lot of you are lending money, giving money away because someone think you have all that. But look at the other people. They're holding on to their money.
You said a mouthful. You said go to your sibling or your family member, but pay them back. Guys, let me tell you something. We should be lending each other. We should be able to go to family, but don't mess that up. Don't do it and then not let them want to help another family member, okay? This is very important. So what I gathered from everything you said, Dr. Jonica, is that people need to change the way they think about their money. They need a money mindset shift because we can no longer rob Peter to pay Paul. We can no longer run out there and do these quick things for a quick answer or a quick. We think it's the quick solution, but it's really not when it comes to our pockets, when it comes to our future. It might seem like the answer right then to go and use that charge card or to go and do something at 29%. But if we plan, if we start today, we can turn that thing around because there may be some people who maybe they had to do it before, but they need to reset, right? They need to reset. They can change that.
Mm-hmm. And the thing is, reset. Do not self-sabotage and batter yourself because of mistakes. Some people can't move forward. They're not forgiving others and they're not forgiving themselves. So that's going to make you stuck. So, however people word it, it is about mindset. Okay. The Lord has given us all the ability to get wealth. Okay. So he's given it to us. He's given us talents. He's given us different ways to make money. Some people set 7 streams of income. Okay. I'm one of those high extroverts. I started a lot of stuff, but then I had to learn to complete them so that I was not, I would not be wasting my money. So perfect one thing, don't go broke over it, and then move on to the next thing, okay? Some stuff you may need to put on pause when you see that checking account and that money dwindling, okay? Some people over volunteer. There is nothing wrong with volunteering, but the word of God I know said charity begins at home. So you have to take care of yourself. Your 401k. Yes, there is a place where you can have hardship withdrawal or borrow from yourself. But just realize before age 59 and a half, if you leave that job, you're going to have that 10% penalty. So why not save? Have the emergency fund, do your investments and everything else later. Let's become debt free. Pay those credit cards down. If you're going to use those credit cards, pay them off every month. Some people may not agree with me, but pay them off every month and then go back and reuse it. But watch your spending. Some people need paper. Some people need to write out a budget. Okay? A budget is not limiting you. A budget is helping you to see the vision of where you need to go and how much money you need to make. How much do you want to have in your household? Buy your insurance. Oh, I'm sorry. You got me started.
Oh, I know you out there. You in a zone. I want you to stay out there. But I just wanted to catch you because you said the word budget and you said have a budget. But Dr. Jonica, a lot of people fail to have that fallback, backup budget for the unexpected or for that disaster or for that emergency. There's not just the budget they need for what they're spending actively every month to pay their bills. They need to also have that fallback budget, correct?
Right. They need a line item. I'm sorry, that's the I couldn't be an accountant because I didn't want to sit in one spot. And if you can tell with my personality, I have to keep it moving. But you need a line item on your budget. Okay. Even if you don't go back and look at it every month, because everyone learns differently. But I'm telling you, I'm tired of learning from the school of the hard knocks. So you better find the way your learning style. Yeah, find that. So put a line item out there. That line item that says emergency funds. If you don't have an emergency fund, you don't have time to get your nails done. You better get a maintenance hairdo like I did. Okay, look at Crystal. You don't have time to just be spending money if you do not have a budget or a 0% interest credit card or Uncle Beaver to go to. And remember, if you go to Uncle Beaver, pay him back. Okay. Pay that debt. Oh, I'm sorry.
You good? No, go. But check this out, y'all. Not only do you want to have the budget, but let's go a step further. You want to stick to the budget.
Stick to the budget. The big D. Huh?
How many people, they have it written. They got it written all day. But when they go and they see that sale, or they see that pocketbook, or they see that shoes, or a new pair of Jordans come out, they want to give for the kids. They don't stick to the budget. Like you went to the good book. It's that write the vision and make it plain. So, yes, you can have it written. Yes, you can have a line item. But you have to be disciplined and you have to stick
to the big D. The big D. Because one D is going to happen. The other D is death. Okay? They're like 3 Ds. And discipline is going to help you be ready. You need the big discipline. Some people are going to be in divorce. Some people have death that they have to deal with. We have to deal with these things. So when it comes to spending, there are theories out there, like the theory of planned behavior, influencing you to buy, going into the marketplace to influence people to buy. You notice when the commercials come on TV, you can have your TV on the background, but when the commercial comes on, it sounds like a megaphone. There's a reason for that. When you go in the stores, unless it's a cluttered store, you'll see the word sell. You see the sales in the flyer. It may have 1 or 2 sales, but everything else expensive in that store. There are things and ways to lure people in. You have lust for sex and lust for spending, okay? And we just can't keep faking it till we make it in some areas. I don't need to look like a big bling bling, okay? You have to have confidence in yourself. You have to know your identity so that when life happens, you won't do retail therapy. I was in the salon and the lady said she loves some retail therapy. And she said she came out of the dollar store paying over $60 worth of stuff. Now, this is the dollar store. And I said, when you get to the cash register, you need to tell people you're going to put the stuff back. And then her hairstylist said, no, they'll take it back for you. So pride comes before a fall. All right? So when you come back to your senses, you be like, ooh, take that back, take that back, take that back. And don't be so distracted. I was speaking to someone the other day. She bought $15 worth of stuff, and the cashier like $45. She was like, I ain't getting no $45 worth of stuff. I'll call you back, Jonica. Okay? Focus on the bottom line. Read those contracts, okay, before you sign, so that you won't be putting yourself in trouble. I'll be quiet. What you saying, Crystal? We can't hear you. I hear you now.
Let me ask you a question. Would you say that with your background in doing insurance and doing finances and doing taxes and doing credit and doing everything you do, would you say that a large majority of people who run into these disasters and these setbacks and they have these unexpected emergencies that are not prepared, would you say that most of them are not financially stable? Or does the financially stable person run into these issues also?
Okay. So when you're saying financially stable, I'm saying living within your means and having an emergency fund. So everyone has to consider what financial stability means. Okay, the people who work for a union, they definitely feel financially stable because they can't get fired and laid off at any point without a whole lot of legal matters, right? Right? Now, if you're in a will state and you don't have at least 12 months of salary, you're not financially stable. Okay? If you don't have enough money to pay off all your bills, if the credit cards company say they're going to cancel the account, stores closed, so those store credit cards cancel. If you're not paying, once a credit card is canceled, if that debt is not paid off, it's still on your credit report. So financially stable to me is having over a 700 credit score. Now, if you're a business owner, it may be lower. So I'm talking to those who do not have a business. Why don't we have a over a 700 and something credit score? Why are our children not leaving college with over a 700 and something credit score? Okay? Then they can't get the jobs they want, okay? Because they looked at the parents and looked at their friends and they had to have all this and that knowing they couldn't pay the credit card back. Now, I'm not talking about my children because I made sure they had over a 700 and something credit score. The young man was excited when one of my children, I ain't going to tell which one because I don't want you to ask him for a loan, but one of the children, when I had to help him move into the apartment, the young brother was excited that he didn't need me to co-sign. Okay?
Nice.
So financially stable. There's still people making 100,000, 200,000, but they have 300 and 400,000 in debt. Not a business owner. Not a business owner. And the credit score is jacked up. So you have to think about financially being financially stable yourself. What is your financial stability number? You have to find out what success means to you, and that's the bottom line. What do you consider success to be to you? I'm not talking about the Kardashians or anyone. Okay, you don't have to be famous, but you do want to be financially stable. Okay, I'm not talking about Oprah Winfrey. I'm talking about you.
Yes, yes. And you said something powerful. You said, what is your number? Dr. Jonica, a lot of people don't think about what their number is. You need to know what that number is. They're in the accounting field, in the numbers world, there's a number. They call it something. There's a number that you need to know that represents, how much you pay out every month. You need to know your number. And you need to have that factored in when you factor in your budget and all that other stuff. Now, you said something also. You said financially stable is being disciplined, and you talked about that. But also for me, financial stability is having enough money to pay your expenses, being ready for an emergency, being able to retire, and not running out. So
Not running out.
having money for an emergency and having money to retire. Now, you said something. For those that are just coming in, Dr. Jonica Rowland is telling us some things about how to be prepared for the unexpected so people are not caught off guard with the tragedies and the emergencies. Now, we didn't talk about the benefits of even those insurance policies, Dr. Jonica. A lot of people don't realize that some of those insurance policies, some of those 401k plans, and some of those things that we have, we can tap into those things when these emergencies happen. When we talk about insurance and when we talk about that, we have also told people in the past on previous shows about how they can actually use some of their money from the policies when people get sick and they need to come in. So there's so many things that we discussed that y'all have to go back and do the replay for that. Mm-hmm. But I want to ask you this question here. So today we're talking about best way to stay prepared. And some people just come in. So what are some things that people can do? They have left their job. They no longer have their company 401k. Some people don't know about how to roll it over, how to take that money and roll it over so they can keep it. Can you talk about that for a minute?
Yes, yes. So let's get to the money matters. We don't talk about the behavior. Okay. So it's your social responsibility. We can't blame it all on the government, and we can't blame it all on the man. Okay. It's your social responsibility to get this right. So start eating your greens, doing what you need to do so you can get where you need to be. Okay? Yes. Let's get down to the money matters. Your 401ks and any type of investment will have a fee on it. It's no way to get around those fees. Okay? And when someone leaves a job, if they're under 59 and a half, okay, um, they need to determine whether or not they're going to roll over that 401k or roll over a portion of it. Just know that the portion you do not roll over will be taxed and it might have a penalty on it. Okay, so you can talk to me about that. Okay, just know that you pay the taxes up front or you're going to pay the taxes later. Do not get caught off guard with these penalties and these taxes. Okay, number two, you roll it over, you need someone to read the contract. If you're rolling it over into an IRA or an IRA brokerage firm, read the contract, talk to someone. You can talk to me. Now, rolling it over in an annuity, okay, you have that option to withdraw 10% a year without having a withdrawal fee. But then again, you still may pay the penalty. So you determine upfront whether or not you want to pull it out a little bit at a time. So you pay the taxes as you go along over the years, or if you want a lump sum, you want to pay the lump sum tax now. So that's where people get caught off guard. Okay. Next, when you have your insurance policies, you want to look, first of all, your insurance policies and your pension, make sure the beneficiaries are up to date. We talked about that on the prior live. So please go back and look at those prior lives. Okay. When you're looking at your insurance plan, you always want to look and see, first of all, what those riders are. You can have a critical illness rider. There may be an accidental and dismemberment rider. Okay, accidental dismemberment, in case you lose some limbs, you may better use your life insurance policies while living. So look at those riders to see if there's a way that you can use those benefits while living before you jump and move all your money out of your savings to take care of a health crisis. Number two, if you have a term insurance, you want to see the length of the term insurance. It could be 10 years, 20 years, 30 years. After that, the premium will go up. Okay. Number three, you want to know if you can change that to a permanent policy where it has cash value. What's your question, Crystal?
Right. So term insurance, so many people, I want to stop you for a quick second because so many of us, we have elderly parents, and I just want to put a plug in there. Guys, go back and make sure you're looking at your people's policies. Make sure you're checking the end dates because a lot of times we move back, we go back, and we help our family members, and we listen to what they tell us, and then we find out the hard way that they don't have it. I know Dr. Jonica has told stories where people thought they had insurance and they did not. So make sure that you look at the policies. If they have lived to be 80, 90, or 100, a lot of times they may have had a term policy and it may have expired. So please, 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 please don't just take their word for it. Go get the documentation, pull it out, look at it with your own eyes, and see the date on there, please. Okay. And I'm sorry, I just want to interject that.
So you're looking at the date on your parents' insurance policies because if they pass away and they have no insurance and you did not save that $10, $20, $30,000, I don't know. I buried two people under $8,000. Okay, you need to learn how to negotiate, but that's another topic. But anyway, and I mean, I've flown them in from 2 different states. Okay, so do your homework now. Do your homework now. I'm talking about my plane tickets. Then we had to fly their bodies in, but then the funeral homes took care of it, okay? So do your homework now. Determine what type of funeral your parents want. So you can at least have some peace of mind knowing that you determine the type of funeral your parents want. You determine you have to have a living will, so you, and a healthcare power attorney, so that you can make the decisions and make sure their best wishes are honored. Okay, some people don't want to be on life support, a resuscitation machine, or anything like that. So that's another topic. Get in your parents' business. It was hard to get into my father's business.
Hold on, wait a
And
bit. You don't want to talk about it. Tell your children what you want. Tell
yeah,
your
my
children.
children don't be wanting to hear it, but I had to tell them. I had to bring up the hard topics.
Yeah.
So the parents, getting back to that term insurance, the parents may have a term insurance. It might elapse because those premiums that were $200 turned into $1,400. So that's how the premium, they make a drastic shift, because guess what? 30 years from now, someone is older. The older someone else is,
Yes.
the more likely they pass away. Insurance is about mortality. Don't get mad at the insurance company. It's a business. But
Yes.
someone can pay for a policy 1 year on $1 million policy. That person died in the right way and did not lie on their life insurance application. That company has to give out that $1 million. So a lot of people keep thinking that is a scam. So notice when those terms are going to end. Like Crystal say, see it for yourself.
And can I ask a question, Dr. Jonica? In your profession, and I don't want to make this a race thing, but it's that, like, our people who look like you and I, sometimes we take that for granted. You know, I've seen a lot of other races and other people. They prepare their children. They have those things lined up for them, and they have them covered. So if something happens, they covered. And a lot of us are too busy thinking, I can't afford it. I can't get that money coming out my check. And I just want to reiterate, guys, if you work for a job and they have a group policy they're giving you, take advantage of it, man. Take advantage of it. Let the money come out your check. You can't afford not to. You can't afford not to. And make sure you get the coverage that you need so you can have these things. Now, Dr. Johnson.
Yes, get as much as you can in a policy outside of work in case you're in between jobs. So don't just rely on the job, because the group policy is a little bit of money. But when you're trying to take that policy, it's becoming a lot of money. My fingers are short, so I can't show you how a lot is, what a lot is. And so getting back to the financial situation on these policies, your whole life insurance policy is the one that's going to last to 100 years old. And they put up there what your cash value is going to be every year. So I have a cousin who said, yeah, grandma had cash value. And when people passed away, if they didn't have insurance, everyone went to their cash value and contributed to the funeral. They didn't have fish fries and GoFundMe pages, right? So realize your cash value can be something that you lean back on. Don't think you're going to pay 1 month and have cash value. 10, 20, 30 years, that cash value can be something. I've seen clients who had insurance policies before I came into business. I came in 2005. They had enough cash value to help their children through college. So when you're thinking about the amount of insurance, don't think about just burial. Think about legacy. How much do you want to leave behind? Okay. But getting back to the hard situation, cash value, you can use that when the stock market was having this crisis, it's still having it now. Those who had cash value in annuities knew their money was there because it's a guaranteed situation, okay? The investments are not guaranteed, okay? But the insurance products through the annuities and the cash value whole life, those things have to be guaranteed because of the simple fact that they are governed by the National Association of Insurance Commissioners, and they have a guarantee association clause in there. Just like the bank has a FDIC, and pay attention to that amount of insurance that the bank has for your money. So when you get that million, because we're learning not to spend all the time, make sure that bank can guarantee they give you $1 million back in a financial crisis.
Can I say this? We're talking about the bank a lot. We want to also remind you to make sure that when you're checking these policies, make sure your information is correct, your information is accurate, because if you have something set up for auto draft, and especially your parents, sometimes they think the money's still coming out. Well, they may have moved, or somebody passed away, or they went through a hardship and they just got psychologically overwhelmed, and then they missed the payment. And if you miss a couple of payments, now you really don't have a policy, because you only have a certain amount of months before the insurance policy will be terminated. And so there are people who don't realize that after they move, or after they change banks, or after something happens, that they don't have a policy because the money was not being drafted. Is that correct, Dr. Jonica?
Right, right. Especially if you have that term insurance, you don't have no cash value. What's going to make them want to hold it more than 30 days? They are liable. They are liable. Someone passed away, and maybe the policy is hadn't been paid. Maybe they'll take, and it's 29 days late. They're going to take that premium out of the death benefit, for especially for term insurance. Now, if it's 30 or more days late, based off the what the insurance company has written, because they have to honor what they have written. If it's more than 30 days late, the insurance policy is gone. Now, let's say that cash value. Let me get to that cash value. Hold that thought. If someone checks the box that they would like for any missed payments to be paid from their cash value, those insurance policies are going to keep going. And if you have the money, get a 10-year or 20-year paid up whole life policy. Because once it's paid up, you don't have to be paying insurance in your golden years. Yes. And what was your question?
So I also want to talk about divorce. A lot of times people don't realize what happens when they're divorced with these policies too. I wanted to know if there was anything you could share with individuals who may have been divorced or maybe looking to get divorced, and a lot of times they don't understand. I'm not talking about as far as the deep debts and the splitting of everything. I'm just talking about as far as policies are concerned. A lot of times when we get divorced, sometimes we don't cover them anymore, or like if we had a job.
I know what you're talking about. Mm-hmm.
That spouse was connected. We had them covered because they were our spouse, but now we are divorced. And sometimes if you don't have a good divorce, you take them off, and now they're not insured. So the one thing I want to say to you, if that is you, let them know that you remove them at least, so they can go get some more insurance. We're just trying to give you some things. We're just trying to jog your memory about things that happen out there with people when it comes to these things. So divorce.
So I'm going to answer that question for you. I'm going to answer that question. Okay. You having a divorce. Stop doing all this self-help. Okay? Stop it. I just want to get rid of it. I don't want nothing. You done gave a lot in there, in that marriage. You gave more than sex. You gave your time. You gave your life. Okay, I've been married 34 years, so I can talk to Jim. But anyway, you want to get an attorney, especially if you have children involved. Get your feelings out the way. Jack and Jill need some guarantees here, because you don't know what that woman, we ain't putting it all on the man. You don't know that woman and that man, they may not be telling you all about their careers, right? Right. And so you just want to make sure you get an attorney, make sure the spouse keeps the life insurance policy, keeps the cash value policy. So if something happens to them, Jack and Jill will still be fine, okay? Or Tabitha, or whatever name they are, Tamika and Rahul. You want to make sure they are fine. And then you gave your life, so try to get some alimony. And if they don't have the alimony, make it a court order that they keep you as a beneficiary on the policy. Now, there are some cases where some people can't afford an attorney. If you have a life insurance policy on your ex-spouse, you keep it. Okay, keep it. Because Tamika, Rahul, Jack, and Jill, they still need to be knowing that they have financial stability so that they can focus in school. Okay, my grandmother had a 6th grade education when she took us in. She was like in her 60s. Okay, so she has the right not to struggle. So keep those policies on your ex-spouse. Put in divorce agreement that they have to keep you as a beneficiary on theirs. And then if you
Yeah.
want, if you don't have the divorce agreement, make sure your ex-spouse is off your policy and change those beneficiaries. Do the same for the pension. And just know that because someone has a policy does not mean they have to pay for the burial. So you want to get out of your feelings and start figuring out who you can trust. And you need to build your list of who you can trust now. Because when the stuff hits the fan, okay, I've been through a lot of deaths, right? When the stuff hits the fan, some people may want to use another word, don't use it. But when it hits the fan, those who you thought would help will not help because
Wow.
they're not as financially stable as you thought. They were pretending. Now I got
Let's go.
some friends on here in my Facebook group. Yeah, they were helping me. Okay. And when the stuff hit the fan, just make sure you're healthy so you can think clearly. Okay. This is not a time to want to go to sleep. You just have to be ready. The war is on. The war is on. And some people, they're not out there on the battlefield, okay? But they're being prepared in case they have to go on the battlefield. So war, um, preparation, it doesn't have to be hard, okay? Let it be a lifestyle. So get into the whole life. I'm sorry, whole life financial stability. Financial stability. Having your 3 to 12 months of salary, having your that salary, having your emergency fund, staying on top of your investments. Remember, there are no guarantees for the investments. Knowing your financial stability number, your making sure you put yourself in a place where you can handle certain impacts, you can handle certain challenges that will affect your mental stability. Also, make sure you let your children and family know where these life insurance policies are. Um, you can sign over third party for all your bills, electric bills. If electric bills not paid on time, how many of you know that a third party notification can be sent to someone you trust so they can follow up and make sure your lights stay on? The same with your insurance policies. There could be a third party notification in case you missed a premium. Let's pay these insurance policies. Your term policy, convert it to a whole life. If you're outside your conversion period, come to Crystal and I. If you have people who do not have want to get social security number, you can't insure them, come to us. We help you get on a funeral expense plan. At least the funeral's paid. And I'm sorry, Crystal.
Comment that somebody put, Miss Big Patricia said, thrift saving plan is it more beneficial to start taking monthly payments now or full at 70 years old?
Okay, so I'm going to generalize here because this is a specific individual situation and we do have licenses to keep. So we don't want no one clipping this video saying Jonica said this and that, and then I have to go to court. But anyway, no matter what you have at age 70 and a half, if you're not pulling your money out, you're going to be penalized. So you have to take at least 10% out for everything. Look at the tax ramifications. If you're going to do a lump sum, are you ready to pay those taxes now? If you're going to have a lot of taxes, a lot of people are always mad, government this and that. You have some control over where your money is going. You go ahead and find you a charity to give some of that money to so it can reduce your tax liability, and then you know where your money is going. Okay? Don't be afraid to pay taxes, but know that you have some control when you give a specific amount of money to a charity, a bona fide 503. Everything is not a charity. Okay? Some of these phone calls coming in there for PACs, PAC, political action committees. So make sure it's a charity. Then that reduces some of your tax liability, but you'll have a peace of mind knowing that you know where your money went. and check with your tax preparer to see how much you can give, because now with the standard deductions and stuff, that's put a lot of people out from writing off their mortgage, interest, and stuff of that nature.
Let me ask a
So,
question.
Miss Thrift person, you determine if you want all the money now. Look at the guarantees, see how much the guarantees are and the protection is, so that that thrift can be maintained. But that's some good money if you have a thrift plan.
Now, for those who don't know what a thrift plan is, can you explain what a thrift plan is?
No, I won't explain that right now because it varies from companies to company. But the thrift plan basically is more so like a healthy savings. It's not all in investments, and that's what makes it unique. It's like a healthy savings, like having an annuity. Having
Okay.
the annuities are like healthy savings because when the market goes down, you don't lose money. Your thrift plan can be that way too. Your 401ks, they're going to go up and down with the market.
So
So
let me say thank you. By the way, she said thank you. So for those
you're so
who are,
welcome.
can you put your website in there? So for those of you who don't know what a thrift plan is, or if you need help with getting your 401k, or you need help making some decisions on whether or not you need to change from a term life to a whole life policy, or you have any questions in regards to insurance for your parents or for your loved ones that you feel may have aged out, make sure you go to this website and check out Dr. Jonica. Or if you think you need some assistance with reevaluating your whole financial outlook and how you want to do it, please, by all means, click the link and go to her website, and she will look at it and check it out and see for you. The whole thing is we want you to have a financial outlook. You need to have an outlook. You need to be looking ahead. And now, Dr. Jonica, let me ask this question, because people come on here different ages. People need to start this at what age? People need to start planning at what age? You know, a lot of times I remember when the insurance company man used to come around to the houses, but they don't do that as often now. If people have not started planning before, what age should they advise their children, their young adults, to start? And can you give them any direction on that? Because a lot of people are in a rut. They are behind, and they're trying to catch up. So I know we can't go over everything today, but what can you tell somebody who's behind and they can't catch up, but they also don't want their children to go down the same path? What would you tell them to tell their children? How would you advise them to tell their children to get started and to make sure that they don't make that mistake?
All right, thank you, and please pin me, Crystal. Okay, it starts with a dream. Okay, if we're not teaching our children how to dream and they don't see us dreaming early, they're going to remain hopeless. I know my children, they wanted to go to some expensive college, and two of them did. But the thing is you start early talking about money. Now, I had one who I said no all the time. Sometimes I said no because we couldn't afford it, but I put it back on them to go ahead and figure out how it's going to happen, and we help them to go there. I didn't tell them they had to go to college. That was expensive for us and them, okay? But they went, and I just had a good peace of mind knowing that my credit was good enough for them to go in case we had to get some loans, okay? They knew that if they overspent their budget, they're going to eat peanut butter and jelly and cereal all month long, okay? So we have to put the responsibility back on our children. And if we don't put that responsibility back on our children, we are going to have a problem, okay? So stop thinking and putting yourself in the mindset that, hey, I need for Frank to have what I didn't have as a child. No, we need to make sure Frank knew how it was when you were a child and why you are doing things the way you need to do it. Okay? So if we're giving our children, which will happen with a lot of baby boomers, we're giving our children everything that we didn't have as a child, then the child is 18 or 30 and they're still not knowing what to do, it's a disservice. We're not working on legacy. So responsibility starts when the child's a child. Not and then as they get older in high school, they need to know and project what their career and future is going to be like, because they're going to think you want to take care of them all their lives, because there comes a time where that child may need to take care of you. So if you haven't prepared that child to be there to take care of you, you are not being fair. Everybody's going through the school of hard knocks now. So the age to start planning for your future is middle school, high school, and moving on. You don't let them turn 18 and then say, you gotta go. You don't push them to go to college when they may have a trade skill. So you start thinking about what they can do, what you're willing to do, and also inform them that, hey, I can't keep giving.
Right.
I don't want to live on the streets.
Right.
You decide on how you're going to help them in the future. You need to let them know before they're out of high school. Don't wait till they're out of high school. Help them plan now. I do want to say this one thing. In planning, you have to show up for your child in high school. You have to go to those meetings. I went to a football game. Everybody was there. And then when it was time to have the meeting a few days later to let the school know what type of principal, a new principal, you're interested in, how about I was the only minority there and everyone else looked like someone else, but still only 20 people were there. Now, you know how many people be at a football game, okay? So I had some athletes and dancers. So I showed up everywhere. You may have to take that pause in your career to show up everywhere. Show up. It's not to take a village to raise a child, right? But let the village see you so they can help you keep your child on course.
Yes. Wow, that's good. We needed that interjection there, because a lot of times everybody is so driven, they're so motivated, they're so hungry, they want so much success, and sometimes these children are being left out. These children are not being nurtured. These children are not getting the direction they need. Now, the other thing is, not only do we want to instill these great habits in these children, but also have conversations. Let's get back to those dinner talks that we had coming up. You know, people are on the go so much, eating everything to go, driving up. Every now and then, have a conversation, sit down at the dinner table and talk about some things. Ask them questions, man. Ask them what they're planning. Ask them what they're dreaming. Ask them what they want to do. Suggest to them about having a budget. Teach them about having a budget. Show them how a budget should look, you know, because before they get out there, you got to prepare them. We have to prepare our children. We can't send them out there to fail. We can't send them out there for society to take advantage of them. You know,
and remember, each child is different. Not mean to cut you off. Each child is different. I was kind of militant. My mom was murdered when I was 10, and if I was going to check out, I wanted to make sure they knew how to take care of themselves, okay? So each child is different. So you have patience with each child, but try not to have favoritism, right? So one child said, I like someone more, and the other was like, no, you like so-and-so more. So the thing is try to be fair all around and fair to yourself. Like I said, my grandmother had a 6th grade education. Our the children's grandparents were gone. Okay, they were gone, meaning dead. Okay, and one was sick with a disability. But we were fortunate that they could go to college and graduate. But it took some planning.
Let me ask this question. So we should definitely, I know when I came up, my mom started a policy for me. She started a policy for me, and she gave it to me when I got a certain age. So I always recommend people sometimes get that policy for the child, if it's a whole life or whatever. And if your child is responsible, then when they get of age, you give it to them. But if they are not responsible, you have to make that decision, and you keep that policy so you know they're insured. I want to go back to the policy for a quick minute because we're coming to a close. We're coming down to the wind down time. Thank you so much. If you're coming in here, if you came in late, go back and do the replay because we're talking about how to be prepared for the unexpected. I want to say this. If you have a baby, if you have a small child, if you have a grandchild, I have my shirt on that says grandmom too, grandmommy. If you have a grandchild, there's no way in the world you should be out there getting those nails done, having all the fly hairdos, getting that hair, getting all that stuff, and your grandchild don't have no life insurance. I'm going to say that again. There's no reason you should have the nails done and all that stuff. You have to make sure you have conversations with your children and remind them and make sure this stuff is being done, y'all. If the policies are in place, insurance, life insurance, you heard what she said. I mean, you have all these different things in place. If you have the critical illness policy, and if you don't have the policy, you may have an insurance policy with the critical illness rider. Long term, short term, so many things out there. All these things in place to be prepared for the unexpected. So you don't have to worry about Uncle Sam. You heard her tell you about thrifty different ways you can do things. If you're about to retire, know what you have. Do your research. Social Security is not going to be enough. Do your research so you know where you stand. Ladies, do your research if you're single and you had a husband but you don't have one anymore. Do your research. Contact Dr. Jonica. She can help you look at your financial situation. She can help you look at your insurance situation. She can help you look at your tax situation, your credit score. We are here today to offer, to let you know you can have a free consultation if you have questions in any of these areas. We just wanted to stop by to encourage you to not let life win, to not let life make you sink, okay? We are stopping by today to help you to understand that in life you will have challenges. You just have to make sure that when you have those 3Ds, you have to make sure you stay disciplined. If you do go through divorce, if you do encounter some unexpected deaths, we still need you to be ready. If you lose your job, we still need you to be ready. If you think you're going to lose your mind, we still need you to be ready because stuff is going to happen. So, Dr. Jonica, any closing remarks that you want to tell the people with regards to just finding a way to just be ready, man. Just be ready, man. We can never be ready.
I know it's our passion. It's our passion. Crystal and I, we lost loved ones. I was just fortunate to be in the insurance industry since 2005 and then work on other financial matters since then. I am a consultant, so I can consult you in every area of your life to find out what you need. If it's financial, if it's business, if it's career, if it's senior consulting, trying to understand your parents. And I stay in my lane. I have the resources if there's something I can't do to get you where you need to go. Email me your address, text me, call me, leave me your address. I can mail you. I do U.S. mail. I can mail you some materials. Crystal has a book on final wishes. That helps individuals to be prepared for death too. But when we're preparing for death, remember, all of it's going to go hand in hand because that's where you're going to be prepared for emergency funds, thinking about your number, your financial stability number, your mental stability, how you're going to handle, planning ahead. Now, Crystal and I we will come to any event you have. If you want us to speak for you, we will be your guest speaker, okay? We travel. I do travel because we have to get the word out to our communities. They're saying everyone's suffering, but don't forget, not everyone's suffering because there is a lot of savings that they're talking about on these financial channels that America has. Savings is at an all-time high. So don't think about gloom and doom. Do not give up hope, okay? We got this hope catalyst here. Just realize it can be done. It's being done for other people. Savings at an all-time high. They're trying to get the money out of savings in the economy. The savings at the all-time high is affecting the economy because no one's spending, right? So don't listen to that gloom and doom. You can do it because God has given you the ability to do it. And if you dwindle down your savings, remember you had it. If you dwindle down your inheritance, you had it. And as long as you got life in your body and you're staying healthy enough, you can get it back. So don't go hit that bottle and those substances because you are feeling low. Just talk to us. Bounce back. Bounce back. Rebound. You watch the sports? Rebound.
Get it. Listen, and also, if you know somebody that you absolutely feel as though they don't have any insurance, they have not gotten any life insurance, contact Dr. Jonica or myself and let us know because we may be able to help them with some financial assistance. We don't want anybody to not be insured. So there's a lot of different things we might be able to assist you with. So the Bible says you have not if you ask not. So you don't have to be prideful. It also says pride comes before the fall. So what we're encouraging you to do today is to reach out and let us know. If you have a question, there's no such thing as a dumb question. Just ask the question, and we are here to help you with any of those questions if you have one. And you wanted to say something, Jonica? Were you waving at me?
Yeah, I'm reaching out. So let's sing our theme song. You remember that song? Reach out and touch somebody's hand. Make this world a better place if you can. Woo! Reach out and touch. So reach out to us.
Reach out. We're here for you. We're trying to be a resource. If we don't have to answer, we'll send you to somebody who has to answer. We just want to be of service. We're just here to do that. Ladies and gentlemen, I just want to thank you if you came by here today. And we hope if you got some information that you thought was helpful to you, share this live with someone. Make a comment and let us know. Please, whatever you do, just know that we're going to come back. Dr. Jonica comes back, and we come back every month too. So if you get questions, if you have a situation in that month and something happens, come on back and say, Dr. Jonica, listen, I had this situation. This is what happened. Write that website down. You see it right there. And
that's my calendar. That's my calendar. We're gonna get the appointment. You're doing enough. You schedule the appointment.
It's out on the top, and follow her and follow me. And
follow us. Message us too. Mm-hmm.
I just want to thank you for coming out. I want to thank you, Dr. Jonica, for always sharing.
Thank you, Crystal.
I want to let you guys know that we are grateful to be able to be here. We will keep this up for a replay. You can go back and replay it. You'll see it on both our pages. And we just want you to know that we're here for you. And come on back at 9 p.m. tonight, because 9 p.m. tonight we have a young lady who's going to be here helping you to heal from the inside out. So you heard about the financial healing, but now tonight at 9 p.m. we're going to talk about how you can heal your body holistically from the inside out. So we're trying to bring the information to you guys. The information is here. So we thank you. God bless you. You know, my mission is to stir up the gift, instill hope, and save lives. And so I always say, keep hope alive. You heard Dr. Jonica say, we don't want you to be hopeless. So we look forward to seeing you again. Come on back and see us again. Thank you for joining us, and I'll see you at 9 p.m. Dr. Jonica, I'll see you next time.
All right. Talk soon. Bye-bye.
Bye. Have a good day, everybody.